my name is Christos. I have a background in economics and engineering, dual doctorates in those at Stanford, and really love building. I love creating. I like writing. And so kind of what got me into this space was a white paper that I wrote with one of the co-organizers of NFT.NYC about 3 years ago, Ian Utility. And so that got me into the NFT space, got me studying. And I'm also here with my co-founder, Sula Parasidis. We have a company called Living Opera, where we're building NFTs that combine the operatic voice together with digital art. And so my kind of entry into Web3 has been both as a creator, although I don't do the singing. Sula does that. Sula's an opera singer. Norman is also an opera singer, and they're world class. I come at it more from the technology and strategy side, business side. So today, though, we're going to be focused on kind of the finance aspect of NFTs and DeFi, the availability of liquidity, what's needed for marketplaces to truly function the way that they're intended to function. And I'm excited to be here because this community, when you go to an academic conference, people are a lot less lively than they are at NFT.NYC. So I really love being here, and it's a great change of pace. And so let me pass it over to Pranav. We're just going to do a round of intros, and then we're going to get into the panel.
Thank you, Chris, and I think it's wonderful to be here, and thank you, organizers, for making this possible. I do agree that wonderful energy here as well, and all I can share about myself is experience in financial services for a good decade and a half. So we were having a little bit of a chatter, before this panel, and we were discussing that NFTs are yet to find their space in many ways, and we'll definitely explore a lot more. But my own angle here has been to discover the creator economy over a span of time, and we have been the largest and the oldest, blockchain fund that emerged out of India. And over a span of time, we have scaled up, from there to Middle East. So I hail from Dubai right now, and we also have a fund in US as well. A bunch of team members who are based in Florida, Valley, and flying from Canada as well. And essentially, we are right now in the fund 2 of our journey. So extremely excited about this. So far, we have made about 60 investments, looking at some 1,800 investments, so far, and very thesis driven. And definitely, when it comes to a lot of these NFTs, going at extremely high value and sort of crashing and burning, it sort of reminds me of my old hat of financial services, and I think about regulations, about consumer protection, about liquidity, which is very apt for this entire panel, and sort of makes me think that what is the future of NFTs. So hopefully in this panel we'll end up exploring a lot more.
Hey, what's up, everybody? I'm Paul Fidika. Open Rails is a company that we're starting. So how many people here own like Solana NFTs? Anybody? Like, how many people have near NFTs? Just basically nobody. Yeah, so we're building a new standard for NFTs on Near. And so like one of the problems, we were originally trying to build on Solana, and one of the problems that we ran into was that the Metaplex standard, all the Solana metadata, all of the NFT metadata is stored off-chain. So like if you go through your block explorer and look at your dgod, like it's just like a pointer to a JSON file. It'll be like dgods.com/JSON file, something like that. To do more interesting things, like to have like customizability, being able to change and evolve your NFT, you really want the metadata on chain. So that's why we switched over to Near. So Near, it's pretty anemic right now in terms of like NFT volume and everything like that. But we're hoping to change that, give it like give it something that other chains can't do. Yeah, I'm a developer, by the way. That's what I'm working on. Me and my co-founder Justin. If anybody's like, if anybody else is like a Near developer, come find me after the talk. Thanks.
Hi everybody. I'm Lindsey from Hedgie Finance. We build financial infrastructure for DAO treasuries. We're definitely closer to the side of DeFi than NFTs. We build like diversification from native token to stable coins. Vesting contracts for DAOs to give contributors. The reason I'm up here today is because we actually use NFTs in a very DeFi way, not a very JPEG way, in our contracts. NFTs in our protocols, they act as unique access keys with transferable ownership rights. So if you wanted to lock tokens in a smart contract that could then generate an NFT that acts as the key to that vault, we use NFTs in that way. Yeah, that's what we do. Looking forward to this.
Yeah, well, thank you, everybody. So one of the first topics that has come up, especially in like the recent weeks as we've been seeing with the crypto winter, is people talking about what's the rationality of the market, how do we understand what's going on, how long it's going to last, and so I just wonder whether we can start talking a little bit about how what we think the current S&P 500 is doing. Like, how do we understand what's happening in the fiat currency, traditional asset market, and then how does that juxtapose with what's going on in the crypto market? So, Pranav, do you want to kick us off on that?
So, I was having a chat in the morning, and I think there's a very simple way to understand this. Look at this as a multiplier equation of x into y into z. When X is basically your micro means, let's say if you're an NFT project, let's say you're hedge finance, what's happening within your specific protocol project, etc. And there are definitely a lot of variables which can go wrong. These could be Web2 variables, could be Web3 variables, tokens, etc. A bunch of things. The Y is what's happening with Bitcoin. The whole space is a lot more correlated with Bitcoin right now. So definitely any stress which comes in Bitcoin eventually translates. And your Z is what's happening in macro, the inflation, the rate hikes, the unemployment data, and a bunch of other things, which are going on right now. And I was sharing in the morning that if, let's say, any of these becomes zero, then essentially the whole equation becomes zero. So it's a multiplier in that sense. So right now, two things are very negative right now. Definitely the Bitcoin is struggling right now. Does not mean that it will struggle forever. That means your Y is technically negative, and your Z, which is basically your macro indicators are all negative. Probably we have not seen this kind of negativity for a long period of time. It seems to be a recession. By the way, just for like a common, I would say, understanding, recession is not bad. Recession simply means that couple of quarters of stress, degrowth, but definitely things can bounce back. They can bounce back with a V curve, with a U curve. It completely depends. So I think the only limited point I'll make here is this is X into Y into Z, and Y and Z are both negative. Now the two negatives do not make it positive, like typically happens here. So right now we are a little bit of a stress right now, but keep your shoulders, don't droop your shoulders yet. Focus on the X, which is the micro. Make your startup extremely strong. As a developer, keep on building some amazing stuff, and we'll be able to coast through.
Yeah, really quickly, I'd say one thing is that your recessions aren't necessarily a bad thing. There's a reallocation that happens within the economy, flow of capital from some projects to other projects. If you had an economy where no project ever failed, you wouldn't have like a sort of meritocracy where there's good teams, good founders that do a good job selling and creating value for customers. So I think the presence of a recession is certainly not something that should scare crypto holders. The other thing that I think Pranav mentioned that's really important is that the whole market is shaking. It's not just the crypto market. And if you look at the correlation between, the S&P 500 and other macro fundamentals, whether it's GDP growth or unemployment, there's actually a stronger correlation with the S&P 500 than there is with a lot of crypto assets like Ethereum. And so I think a big question is around how do you hedge against systemic risk, and crypto assets can be a great hedge against that. But with that, Paul, or any comments?
So the question was like, where's the market heading, or what's going on right now?
Rationality of the market. What do you make of what's going on? Yeah.
What's going on with the market?
I could jump in here.
Yeah. Well, I was gonna say that crypto is essentially has no real a lot of the crypto has no real use case yet, right? So like it's you're basically it's just based on these influencers like on YouTube and TikTok, and just they buy big bags of something and then they try to shill it, and then there's other people like investors who have money and then they go in and buy it, and then everyone dumps it on them. And then the problem is that the average investors kind of run out of money. Like they can only lose so much money so quickly. So, yeah.
Wait, I'm going to push back a little bit, Paul, about use cases. So it seems like, when you said that there's not a use case of crypto, elaborate on that.
If I could jump in here, because I think it's not for the title of this speech, NFT marketplaces are the new stock exchange. I think crypto, yes, has use cases, but it's not, I don't think it's accurate to actually say that NFT marketplaces are the new stock exchange, because they're just not. They're closer to an auction house, and that's a very cool thing to have a new radical form of auction house that has democratized access. That's great in itself. But to call them a stock exchange is like it's not. I think it's just kind of silly. But as far as like NFTs losing value, they behave more like art than something that does actually have value, inherently in like, the actual structure or infrastructure of some crypto. So yeah, like when NFT projects drop dramatically in value, it's because there's no demand for them, right? Like that's all it is. There's no inherent value in any of this, just like art. There's just no more demand. And so what we're seeing now is that, yeah, if your NFTs dropped, it's because no one wants to buy them because they don't like the art anymore or something. I don't know.
Yeah, and I was going to say is that what we need for the future of blockchain really is to take real world assets like a company, like equity in a company or commodities or something like that, then tokenize that and then trade and sell that. People haven't done that because it's kind of illegal because the SEC is like you need to register, blah blah blah. So like, but these JPEG things you can shill those all day and sell them. Yeah.
Do we want to? That might be worth going down a little bit of around like the whole definition of like what is a security. And I think you raise a great point, Paul, about how can you use tokens to create forms of value, whether it's for a startup that's trying to raise capital but doing it through an unconventional means, or whether it's a way of compensating people in the community. So maybe Pranav, since you come especially from a more of a finance background, a traditional finance, maybe you can talk about how tokens can serve these multiple purposes.
So I think there are two things. One is that underlying contracts, so smart contracts are a way of building these contracts. But let's say usually people are used to legal contracts, right? So how enforceable are these contracts? And some of the things which have happened recently on DAOs are, I know they're worrisome, but definitely will evolve out of it in many ways. I'm just talking about Merit Circle and what happened with YGG, etc. So there's a part of it is about building solid contracts and making them enforceable, which is about rights being enforceable. So this is point number one. This is very important for building the underlying utility for tokens, because you may have tokens, you may have let's say micro. I was mentioning about XYZ, right? So let's say within that micro cosmos you have built, within the micro economy, you may have utility, but what if, let's say, there are no rights? So essentially, when things go south, the entire system goes south, which is what we are seeing in many of these, well-meaning founders and well-meaning protocols, etc. So, so on the aspect of having in-economy utilization of the tokens, it is very important to have certain things like, for example, you can have burns, or let's say you can have certain returns, etc. And we know how this has went with the recent crashes and Luna situation, etc. And definitely that sort of treads into the space of being a security, because in a way what you're doing is contractually you're getting obligated to give certain amount of returns, or certain things are becoming a causality in terms of burns, etc. Right? And this is where the regulators sort of step in and say that, hey, you're sort of competing with our traditional products, so why don't you queue up in the line and take traditional approvals of the traditional financial products. And this is where NFTs become a lot more interesting, because they can become a access card, like the way Blake was mentioning, that they can actually be seen as I would say the auction houses, let's say, as a lot of these NFTs land up aggregating a lot more volume, but they can also become auction marketplaces, and that is what they can seem and be experienced as a lot more like stock markets. But essentially the holy grail then is liquidity. That where does the liquidity come from? Does it come from traditional spaces? And that's where the conversation around S&P and what's happening in the broader markets becomes a lot more relevant. So the limited point I'm making here is that till the decoupling of these markets happens with the broader markets, there is no real liquidity which will actually be a lot more scalable in this space. And that means that the stock markets, they will not become stock markets as a whole. So I just wanted to land with this point as well.
Well, I mean, one of the things that came up was around the tokenization of real-world assets, and I mean that's something I think we can talk a little bit about. Is how do we bring more liquidity in? And so, I mean, I have a friend that runs a company called Robin Land. They collateralize real estate, commercial properties, and so, but that's not necessarily super liquid. I mean, these are longer-term liens on assets, and so, I mean, I'm kind of curious to hear from everybody's perspective here. Maybe Lindsey, we can start with you. you around how we might be able to collateralize real world assets that do actually have some amount of liquidity, or maybe there's another direction you want to take that.
I don't actually have an answer for you there. I know like there's some organizations that are looking into that, but mechanically that's out of my world. I do think it's very important to just understand that like this is a very new asset class. And so like this urgency to get it to the point of having the liquidity of some of these markets that have been established for 50 years is just, it's not going to happen. It's going to take a long time. Like if you're not comfortable trading in a low liquidity asset class that's highly volatile for the next 15 years, don't trade in this market. But that's fine. That's also where like you can find really great technologies. And I think that's what draws a lot of the personality types to trade NFTs. They really like a lot of that early rough volatility and also just discovering like inertia being created. But I don't think we have to rush to say like, yes, we will have, max liquidity by doing X, Y, and Z. If we just get all of the land on blockchain, we'll be fine. It's not going to happen. But a lot of other cool stuff is going to happen.
I wanted to, since you asked that question, on Solana, like I was at the Hacker House and there was somebody working on a REIT that they're bringing on chain onto Solana. So you'll be able to trade that. They've spent the last 9 months going in like $400,000, like probably going through and getting a REIT on chain. Not easy to do regulatorily, but worth it. Then there's the parcel guys. I was talking to them outside yesterday, right? They're bringing, I think there's like this housing index, right? And they're letting you like buy long or short that housing index on chain. I think that's really interesting, is tying tokens prices to like actual real world value.
Yeah. So one of the other topics that I think this kind of brings us into is around the legal and regulatory aspects, and Pranav mentioned this around SEC guidelines, and it's a controversial topic. What is an asset? I want to mention two things. First is that some of the conversation today, especially in its investing track, has been about democratization of the space. Is this really for everyone, or is it something that you just have institutional investors, and this is just like the same thing that we've seen for a long time, just like a slightly different shape? And so I think from our perspective in Living Opera, we're trying to tell the story of how do artists get involved in this? How do artists have a really good skill? They've harnessed their voice. They've trained for maybe decades, and they're able to deliver an extremely good performance, an extremely good opera. How do they participate in this sort of community? And somebody that doesn't know how to do like as a developer, somebody with Paul's level of skill, how do they participate? And so you're juxtaposing the desire for access and consumer protection together with just a novelty and the fact that this is a new space that we don't have all the answers to, and that we're still working on it. And so, Pranav, maybe you could talk a little bit about how you look at investments in a space that's actively worked on, where, we're not going to have the answers until we continue just to keep on building. Like, there's not going to be the legal infrastructure to resolve and to enforce unless we keep on building. And so maybe you can share a little bit about from your perspective.
So, if you look at this entire space, let's, just look at broadly, blockchain, or let's say crypto markets overall. These are non-linear pathways. So I think people who have been struggling a lot more into this space, they have been thinking of this as linear pathways, much like capital markets, like investing into bonds, or investing into stocks, or real estate. These are very linear, established assets. Like Lindsey was mentioning, these things take 50 years to gain that level of traction, liquidity, and standardization. So in many ways, the non-linear pathways means there is a lot of non-standardization right now. That means that let's say we invest, we look at this from bottoms up, first principle. First principle means that we look at definitely the team which is out there, which is building stuff, whether it is valuable, they're solving a valuable problem. That means we need to know and work backwards that do we have a solid thesis on what the world will look like in the future, and sort of see that is this problem solving going to be extremely valuable, and is it worth sort of investing? Are these the right team? Is this the right team which is going to sort of solve this problem? And eventually, as this problem gets solved, the community will sort of rally around it. Definitely, the other participants will also step in, and that's how the liquidity will be discovered. That's how the value creation will happen, etc. I'm just trying to oversimplify this. Of course, all of this happens over like 3 weeks, typically, when you are investing into something. But I just want to share here, why am I sharing here with all of you here, is that when you, let's say, buying an NFT, you should also look at it from a very similar lens. Because definitely the liquidity is not going to come in overnight. It's going to come in when, let's say, there is a sense of community. That means there's a deep identity and affinity, which is a belongingness in which has been built around. And that means there are people who are willing to sort of, go extra mile in terms of stretch and strain to see that how they can be part of that, closed circuit, closed group, A. Or they can, the NFT itself is able to create that pathway for you to get some unique access, or let's say, something unique which can help you with real world interaction or access, which can help you. I'm just giving an example. Let's say there is a famous Bollywood star, can you get, let's say, access for lifetime for all the movies that Bollywood star sort of comes out with on a premiere? This is a very interesting NFT. So, but if you're just selling an NFT of that Bollywood star in, let's say, a certain pose, it may be of very limited value, JPEGs, right? But the access is a very powerful thing, and in many ways the technology itself is so powerful that it creates a space for a lot of this gamification to happen in the real world. And what really excites us is those tools which can create this bridge between the virtual world and the real world, and sort of gamify this and make it a lot more accessible. These are white spaces. So a lot of these white spaces, those you can say builders, as in founders who are solving for these problems in white spaces, will create tremendous value. That's how we look at it. Sorry for the long answer here.
No, no, this is good.
NFTs can give you access to groups, to communities. They can give you access to governance. They can give you access to things. It's basically just a way to identify that you have the right to be wherever it is that you want to be. And I think when we start thinking about NFTs in that way, I think, in this next kind of phase of it, we'll get away from a lot of the speculation of NFTs and start using them more to group ourselves, create communities, and identifying communities. I think that's much less speculative, and maybe that's less exciting for some people. But I think as far as like the future of all of this, which is the ability to accelerate how humans collaborate and connect in a decentralized universe, I think NFTs are incredibly powerful as a technology. And I think it's very healthy that we all see the kind of like bullshit of speculation dying off, because you will never get to like the true potential of this kind of technology if you're just stuck in that first phase of it. So that's it.
My thoughts are NFTs are essentially just a data unit. Just think of it as like a unit of data. It stores data, and then it has methods that you can call that like modify the data. So think of it like just, you could make like a Pokemon like character. It could be like an AR with like Tim Cook's Apple Glass stuff, and it could just be there, follow you around. And the interesting part about it is the composability, because like when you're in a centralized database, right, like you need to build APIs and let other people interact with your data. Yeah, it's kind of more like a modular composable unit of data. That's kind of like how I see it. So like simple use cases, we'll probably see a lot of simple use cases. Like you could just have a punch card NFT. When you go to a store, you get one extra punch, and then you get 10 punches, you get a free sandwich. Just something simple like that, like real world use cases. Video games are obviously a great use case for them. Yeah, that's all. Thank you.
So I would say at the fund we see NFTs as the key to the metaverse. Now let's say there are different ways of looking at a metaverse, but let's say technically somebody put it in extremely well that when we actually texted for the first time, we landed up being in a metaverse, as in through our phone. Because when you're, let's say typing a message to somebody, essentially you're visualizing that person. So in your mind, you're already in that zone of being with that person, talking to that person, etc. So what it means is that, let's say NFTs give you that non-fungible data unit, metadata, etc., which is very valuable for you to interact very sharply with a unique identity and sort of collaborate in a certain context, which can be designed and devised locally. And I think that is extremely, extremely powerful, because something like this did not exist earlier. What it means is that as various technologies like AR, VR, IoT, AML, etc., sort of converge along with blockchain technology, some very interesting spaces will emerge, some futuristic applications will emerge, wherein NFTs will become the entry gateway to these spaces. And that is something which really excites us in many ways. And I think a lot of these initial problems that we see around scalability, high fees, low liquidity, composability, etc., a lot of these things will be solved, as a lot of other technological problems have been solved over a span of time. And when we look back, we'll see that, hey, Why were we like so much worrying about it? Why were we so concerned about the price, etc.? So if you are holding on to something which is extremely valuable for a group of people who can ascribe value on a sustainable basis, my suggestion would be to stay on and stay strong and hodl so that you're able to like coast through this difficult times and focus on fundamentals. Fundamentals will eventually discover value. Thank you.
Yeah, no, I'll be quick. I'll just say, yeah, focusing on fundamentals, focus on solving problems. That's what, I mean, assets have to be about value that's being created for somebody. So know your market, know what you're building, and stick to it. If you don't believe it, don't start it or pivot at some point. So it's really exciting to have everybody on the stage here. We're going to transition to the next panel. So let's transition, and thank you everybody for being here.
You don't even have to leave the stage.